January 10th, 2025. What a day. Sunny and blue skies behind me, so it's casting you shadow. There you go. See that bright old sun. Lucky old sun. Nothing to do. Roll around heaven all day. Like that song. If you know, you know. So, Friday, crypto trading means. What? That's right. There are always means of returns, and the assets always sees, no matter what asset it is, the returns do two things. What are those two things? If you know, you know. Returns distribute away from the means of returns, and returns mean reverts to the mean of returns, which is why the mean reversion on the 3012 RMLR remains in mean reversion to the 3012 RMLR on the daily time frame, which is above it. Even though it is zigzagged, it's come down from that high, or it went up from where that third standard deviation band was up to in early December, went up to that high some days later by the 17th, and then has been, coming down and going back up and coming down and going back up since then. And in fact, if you remember, at the beginning of that time, I said, look, at the moment, it looks like the probabilities are that we'll see the mean reversion happen somewhere towards the upside, but there are probabilities that it will mean revert sideways or even possibly down. In fact, I even showed you on one of these live streams where I whipped out the old fancy pen tool, and I drew a nice little zigzag, a few different directions, up, down, and sideways, up, down, and sideways. And I showed you possibilities, probabilities. Showed you what the RMLR was doing. So remember, we don't care about it's not a price indicator. It is a direction indicator for the future RMLR. How has the RMLR played out since then? Well, as a direction indicator for the RMLR, it has actually played out day to day incredibly well, failing every single day. And again, as I told you at the beginning of that mean reversion, you will see the lines shrink or extend or stay the same. And on any given day, it happens. But the direction will generally stay the same. And for the most part, in fact, almost every one, the direction has stayed the same. If you compare the RMLR from November, whatever it was, 17th, or not even that, November, no, not November, December, like 10th, it was a Saturday, I think the 11th or 9th or 10th, somewhere around then. Compare that RMLR, the projected, the asset generally rising over the next 30 days. And I showed you, but there's a lot of zigzags in between that go down. And I said, depending on the size of those zigzags, whether they go up or down, whatever they do, keep an eye on them, because you could see the reversion happen to the upside or sideways or down. Right? It is still in mean reversion to that RMLR. Now, why does that matter? If the price is going to go up, down, or sideways, we know that. Yasha, how is that helpful? Again, as I always tell you guys, with the RMLRs, if you know how to use it, it's incredibly powerful. Why? Because in the case where you have a mean reversion happening, for instance, where the RMLR is above the asset, like it is now and has been for the past, month and a half or so, or month or so, or whatever. Yeah, more than a month and a half. But you have the mean reversion already happening since like mid-December, for like almost a month, like a few weeks at least. Well, then you know your target to the upside is the RMLR, or sideways, or down. But you know that the target on any longs would be to the RMLR, as long as the RMLR is above it and the future lines remain above it. And you know that to the downside, your targets are the third band to the downside, because it's not likely to hit that band again. So if it even approaches that band, you would take profit. But of course, on a daily time frame, that's a very big way away. So if it did have a significant drop down to that area, on such a move, the likelihood of it touching that band is very unlikely. It is less than 0.3. And certainly at this point, while it's been mean reverting for almost a month, is it possible that it goes down and hits that band again before hitting that RMLR? As I always say, yes, of course, anything is possible. That's why we read probabilities, and we don't claim them to be absolutes, right? But I can tell you absolutely that the probability remains extremely high, well over 99.7%, that the asset will complete the RMLR mean reversion to the 3012 RMLR on the daily time frame before it hits third band to the downside. If you look also at yesterday's RMLR, you'll see that yesterday there was an intersect of the 33 power mean and the 3012 RMLR, which means that between 0 and 4 candles from yesterday, and now between 0 and 3 candles from today, there is a very high probability that we will see a nice move relative to the time frame on the daily time frame. Does that mean it has to go up or down or sideways? No, it doesn't. A nice move probably wouldn't go sideways. You could have a nice move go sideways with the body of the candle, but you'd have some kind of nice wickage going up or down in the meantime, right? And already today you've had the move. It's gone up, 3 or almost 4% that I saw last about an hour ago from the bottom yesterday at around 91 and change when it hit that 4-hour normal distribution target perfectly and then proceeded to rise up since then. And it has gone up a few $1,000s since then, right? From like 91 and change to like 94 and change. That's 3, almost 4%, which is a lot. And if you caught 3 or 4% in a day, if you did that every day, well, you'd be crushing the market, right? Market makers, hedge funds, and Wall Street brokers, and Wall Street traders, and HFT traders. For them, that's a very high target on a given day. Now, there are, of course, HFT traders who make that and much more. Many of them, in fact, because, well, they're HFT traders. But your traditional traders using traditional technical analysis, which still exists for some reason, and they call themselves professionals, they're lucky if they beat the S&P 500 on any given year, right? So for them, if you make 3% in a day, you're like a king, right? If you do that consistently, you're like a legend, man. They don't do that. If you trade 5 days a week and you rack up anywhere from 2 to 5% a day, then you're some kind of hero, right? If you do that like every day over the course of a year, you're like, there's, mythical tales will be told about you. And if you do that for years on end, I mean, you'll literally be a legend in the world of trading, right? So don't think that a few percent move isn't worth your while. It absolutely is, right? And if people are like, "Oh no, you're gonna have a bigger P&L than that by swing trading and putting more volatility on the line," why? To show how risky you can be for no reason? Look, you need to have some risk for reward, but that doesn't mean you have to make foolish risks, right? You need to be smart and wise about the risk you take. You need to manage your risk well, right? What does that mean? That means don't put money on the line that you can't afford to lose. Don't risk capital that you can't afford to lose. That's what that means. So if you come into alpha trading, the number one thing you will actually learn, more important than any strategy or technology or indicator or methods that we use to trade, the number one thing that you learn will be risk management. To not lose your money, to make sure you take your profits early and often, to limit your loss, and above all else, and don't be emotionally attached to your trades. Right? Don't trade things that you care about, like emotionally as a trader. You might care about it separately from trading, But when it comes to trading, you shouldn't be emotionally attached. Right? It's just assets you're trading. You're there to take profits. That's it. If you're not doing that consistently, you need to learn a better way to trade if you want to be a trader. If you don't want to be a trader, that's fine. But don't pretend you want to be a trader and consistently lose more than half your trades and think you're a successful trader. You're not. If you're not winning at the very minimum one standard deviation of your trades, meaning 68.3% of your trades or more, you're not doing it right. And I know in the TA world, they think that's crazy. Nobody wins 68% of their trades. Actually, in the BEPS world, it's not unusual to have an 80 or 90% win rate. It's just not unusual because you know how to read leading information and take action accordingly. Well, that's going to do it for now, guys. Remember, if you want to join our Discord, it's free. If you want to join the live stream, you're welcome to do that. It's in the Discord, alphatradinghq.com/Discord. All right. See you guys there. It starts at 11 a.m. Eastern Time, U.S. Eastern Time, just to specify. And that's it. Happy trading, guys. See you.